Hello everyone, today's video is all about insurance. That's not insurance on your house or insurance on your pet, your car, your phone. It's insurance on you. And the first thing is I want to bust a bit of a myth which a lot of people seem to still be under, is that you've got to have life insurance if you take out a mortgage. And in the vast majority of cases, you don't. There's absolutely no requirement for you to have any form of insurance on yourself, your income, your life, if you take out a mortgage. So if anybody tells you that you've got to, just treat it with a little bit of caution. But whilst you don't have to, it might be quite a good idea. The reason this has come to mind this week is that the last few people I've spoken to about insurance are about my age, give or take. I'm currently 46, but clearly look far younger, around 22, I would have said. And obviously not. I know I look 46, perhaps I'm 56 some days. Yeah, as people are around my age now, when they're talking to me about insurance, that means that they've had a few health issues. I'm in generally quite good health, but when I was to go through, if I was to go through a life insurance application today, they ask about, have you ever had raised blood pressure? And I have. Have you ever seen a doctor about any lumps and bumps and rashes and that kind of thing? And I have. I used to have a little lump on my face here, which nothing to worry about. That was fine. But all of these little bits and pieces of health issues that crop up through your life make you a higher risk to insurance companies. So it can be harder to get insurance. So maybe if you're in good health, now would be a really good time to talk to me if you're one of my clients, or to find another independent advisor if you're not one of my clients, if we haven't worked together before or if we don't know each other. Because getting insurance when you're healthy is the right time to do it. Do not think about insurance when you think, oh, I don't feel great, I'm going to need to address this insurance. By that point, it's probably too late if you've got a pre-existing condition, to be really blunt about it. The other thing to keep in mind is, at the risk of extending this a little bit, is it's not all about life insurance. There are tons of different insurances you can have. Generally, whenever I'm talking to people about insurance as their advisor, I'll say it's in two arms. You've got the arm about things that are outside your control but you're healthy. So what happens if you're made redundant? What happens if you're sick in the short term? What happens if you break your leg? That kind of thing. Accidents or redundancy. That is important, but I'm parking that for today. We're talking about what happens if anything happens to your health. On this hand, you've got the three big categories are life insurance. What happens if you die? That you can have policies that were set up to just pay off the mortgage balance, so the cover reduces as your mortgage balance reduces down. You can have policies which pay out a set amount for a certain amount of term, a certain pre-agreed term. So you could say, I want to have £100,000 if I die before I'm age 70 or in the next 20 years, that kind of thing. You can also have something called family income benefit. This one I think is really interesting and is really undersold in the industry as a whole. That means that should you have children, let's say that either you've got children on your own or if there's yourself and a partner have got children, if you were to die, you can set up a policy that will pay your children or their guardians 20, 30, 40,000 pounds a year until those children reach maybe 18, 21, post-university, that sort of age. And that's really cheap. So you can get that for really, really good value, again, providing you're still in good health. Yeah, that's something which a lot of people don't look at. And also, loads of people don't even know exist. Those are quite cheap because the chance of you dying within the mortgage term statistically is really small, really cheap policies. The next thing, critical illness cover or serious illness cover as some companies are calling it now. This generally covers dread diseases. There's normally, with all different providers, there's 40, 50, 60, sometimes up to 100 or more conditions covered. The vast majority of claims, there are things like cancer, heart attack, stroke, or total permanent disability. Now, these policies, you don't need to die. You don't need to be told you're going to die. You just need to be told that you've been diagnosed with one of these horrible diseases, and they can be set up in exactly the same way as the life insurance. A reducing amount that would just clear the mortgage. So if you have a heart attack, your mortgage is cleared, you don't need to worry about meeting that bill. You could have £100,000 to pay out if you have a critical illness before your age 60 maybe, because you might think, I want enough money to either enjoy the last few years of my life, that's what it is, you want to have enough money to pay off the mortgage, you might want to have enough money to change your lifestyle and put a standard stair list in, that's what you needed to adapt things to your new needs, and take your foot off the gas a bit with work. So you could think if you've got 100 grand came in, maybe you don't need to work 2 or 3 days a week rather than 5, 6 or 7 days a week. We're up to 4, nearly 5 minutes now, so I'm going to try and keep this a little bit briefer, but bear in mind you can set that up as well on the family income benefit basis. So if you were to have a heart attack, you could maybe set that up so you get 5 grand a year coming in, so you could afford to have a cleaner come in perhaps once a week just to take the pressure off again if your health wasn't quite where it used to be. Then, so we've got life insurance, what pays out if you die under a variety of ways. Critical illness cover or serious illness cover pays out again in a variety of ways, different sums assured, if you're critically ill, so if you have a dread disease basically. Policies vary a lot, so do take some advice on that, I would suggest. Don't just go online and find something that you can pick up on a comparison site. These two you probably need an advisor's help for. I'd suggest it's worthwhile having an advisor's help for. The final one is income protection. Now, income protection varies really dramatically from provider to provider. The way they're set up, you can have age-rated policy, you can have guaranteed premiums, reviewable premiums, the reviewable period changes, all these weird and wonderful words which you don't need to worry about. Basically, you need an advisor to worry about those for you and to explain what's best for your situation. And income protection, the intention of that is to replace your income if you're off work sick or if you just can't work. With most of them, there isn't a list of conditions that you can have. So if you're off work with a cold, you can have the payment. If you're off work with just a sore throat, you can't. Nothing like that's really straightforward. Generally, if a doctor says you can't work and you're off work because you're too poorly to go in, then typically they will pay out. I've oversimplified it a lot because we haven't got 2 hours for a meeting. We've just got 5 or 6 minutes for a quick video. So that income, let's say you get sick pay from your employer for 3 months or 6 months or 12 months, even if you're in the NHS or in some teaching roles and some other roles as well. Once that sick pay ends, things get really crap really quickly for a lot of people. We see quite regularly people who've got no savings at all. I see people quite regularly who've got maybe enough to cover the bills for 3 months, 4 months, 5 months. And quite often people will have a bit more than that, maybe sort of 20, 30, 40, 50,000 pounds in savings. That gets eaten up really quickly if you're off work sick. So I would suggest, especially unless you're sort of like pensionable age, so if you're maybe sort of 65, 66, 67, and you do have some pensions that you could draw on if you couldn't work, you don't need income protection, You could just survive without it, draw on your pensions if you needed to, or live on savings. If, however, you're in your early 20s, when you think maybe you're not likely to get ill, but people do, you're probably going to need that. And if you are off work sick for a long time, it can pay out right the way through till retirement. So if you were to be 25 buying your first house, or 35 or 45 or 55 buying your first house, when you take that house, when you take that mortgage on, maybe take out an income protection policy to protect that. So once your sick pay from your employer runs out, or if you thought, I can afford to support myself for 3 months, 6 months, take something that will kick in after that. The reason I keep saying leave it 3 or 6 months or whatever is that the longer you say you can cope before the insurance policy pays out, the less the insurance policy costs, because you are probably going to have a week or 2 or 3 off work at some point with, a flu or COVID, God forbid, if that sort of comes back again. And hopefully you'd recover within that 2, 3, 4 month period. But of course, if you wanted it to pay out straight away, the insurance company's not only got to pay you some money, they've also got to pay to administer that claim. I'm speaking really quickly here because I don't want this to go on all day for you, but hopefully that makes a bit of sense. Okay, quick recap time. We've got what happens if you die. You can get policies that pay out for that in a variety of ways. What happens if you have a critical illness, so you're really poorly? You can have policies that pay out for that. They're way more expensive, way more expensive than life insurance, because you're about 4 or 5 times more likely to claim on this than you are on that. So if this would cost you 10 quid a month, this is probably going to cost you 50 quid a month for the same amount to cover, really approximately. Varies dramatically between age and occupation and so on. Income protection, that just pays out roughly half your gross salary or income if you're self-employed every month, right the way through until either you return to work or until you reach retirement age. You can get some budget policies that will only pay out for a year or 2 or 3 or 4 as well. Now, all this in 9 minutes' time, you've just learned about every type of insurance on this arm, or the vast majority of them on that arm. So what do you do about it? You can go online, research it all yourself. As I mentioned, there's loads of websites, you know them, the ones with the meerkats, the ones with the opera singer, that kind of thing. They'll typically offer you different quotes on that, but they do vary a lot between providers, the cover that's provided, the conditions of the cover, the payout conditions as well. So probably worth taking some advice. This isn't for me to drum up business for myself, it's to try and give information to you. And by way of proving that, if we've not worked together before, I can't help you at the minute. I'm not taking on new clients right now. So you'd have to find somebody else. I'm really happy to put you in touch with somebody, or have a Google, have a chat with your friends, family, see who they've spoken to. If, however, you are one of my clients, and we have worked together before, or potentially, Mum, if you're watching this again, I will talk it through with you, but probably you don't need life insurance or health insurance. Me and Helen will take care of you. Helen's my sister, by the way. So if you want to get booked in with me and you're a client of mine, or you're my mum, give us a ring and I'll try and get you booked in, or pop me an email down at dtcsfinancial.co.uk. Alternatively, if you're not my client and you're just watching this thinking, wow, what a very handsome mortgage and insurance advisor we've got talking to us through the screen, then have a Google, try and find somebody yourself, or drop me an email if you'd like me to point you in the right direction. Anyway, I hope you're having a wonderful time, a wonderful Wednesday, and everything's good with you. I'm going to go and grab a glass of water because I've just been rabbiting on for over 10 minutes. Have a lovely day. Bye, 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 bye. Oh, none of this advice is personalised. None of this is intended to recommend you take out a policy or don't take out a policy. This is just some blurb for you to have a thought about. And it's been on my mind that loads of people don't have enough protection, and also quite a lot of illness recently around, it seems. There's been some friends of friends, friends of friends of friends, and family and so on who've been suffering, and some of them haven't got protection in place. So yeah, maybe get yours sorted if you're in a position where you can. Have a lovely day. Bye for now.